Hello and welcome back to another video. In this video, I will cover to provide you the ETFs on the gold. And basically, gold is very good to have on this portfolio because it has the low correlations of with our portfolio. And based on these market volatility, I see so many people are talking, okay, what is happens, and stock market will crash today or tomorrow, and so on, right? And there is always a risk because there is no floor on the equity. And so recently I have posted the ETFs on the broad-based index, on the dividend index, and I got some good comments that can you make something more on these. So I thought maybe just to on this one, it's also to have something like gold ETFs on the portfolio, right? Because gold is provided as a low correlation, but that's for sure, and it doesn't make sense for us as an investor to go outside and buy like a brick of gold and then store, and then it has a storage expense and so on. So and to go on the other route, basically to buy these companies which has in gold mining and all, like for example Kinross and all, I'm against it because the idea is, okay, maybe it's provide some low correlation, but at end of the day these are like companies, right? So they have their own noise. So on otherwise, if you can see on these the gold ETFs, basically these ETFs which I will going to show you, they just work they on the gold prices, and then they have the gold vault in the London's, right? So let's without further delay, let's get started. So I will give you the gold, but whoever is new to my channel, I will give me quick in my intro to them. So myself is Pramod Kumar. I am a CFA charter holder, as you can see, and FRM certified, and I have a riseanalytics.ca, my website as well. Here I put some courses there as well. So I'm for the CFA candidates, but I'll see if I can do something for the common regular people as well. Okay, so let's get started without further delay. So the first one which I like to share with you is the very famous the ETF, which is the ticker name is GLD, the gold. And basically, if you can see here, this is the prospectus for the gold, and it's been issued by the Street, the global advisors, and under the brand name of SBTR. Okay, so GLD basically tracks the gold spot prices and minus some minor expenses, right, using the gold bars held in the London vault. So, right, so it is very good correlation with the gold prices. So if the gold prices goes up, this ETF goes up. If gold price goes down, is simply goes down, right? So an exposure type is, that's why it's mentioned here, physically held, because they are using as a gold bars in London vaults, right, for them. So if I read the description, it's the largest ETF invest directly into the physical gold, right? So here's the keyword here is, you can see, right, invest directly. The net asset value is determined using the some London precious metal gold prices. So the gold has extremely close relation with, you see, they have extremely close relationship with the gold spot prices. It's structured as a guarantor trust, protect investors. Trustee cannot lend the gold bar, right? So it held as a trust. Taxes on the long-term gain, blah blah. These are just common terms, but these are the main one, right? So it's gold is typically cheaper to trade, and right, and NAV has a lot. So this is less, little bit less. But if so, the main thing to here is the 2 point, right? So it's invest directly into the gold, and it has a what I have been saying, it has extremely close relationship with the gold spot prices. One thing to note here, it's not very expensive. Again, this is only 40.40% in terms of expenses. So I believe it's $4 for right, every 10,000. And then if I'll show you the price, right, the chart of it, for sure the past won't repeat the future, but what I'm trying to say here is, okay, let's see. So if you see from this chart and hold on your portfolio, right, and then you say, oh, it's not very good, right, because the 10-year is only 3.18%, right, the gold, right, and the gold spot, if you just go and buy the gold, and the spot price actually is also 3.22, right, it's a little bit lower because earlier they mentioned because of some operational expenses around, and that's not very a lot, right, only 4 basis points. But what it's really give it to us, for example, this year, right, if I go to the let me go to the Yahoo Finance and try to show something, and then I'll quickly come here. Let me take a pause. So just to refresh the memory, right, so I have bring the Yahoo Finance site out, and then this is the S&P 500, the global index, right, and if you see just for the 1 year up to the date, right, in the beginning the index was 3200, and then it drops to 2237. So if I'll put in the calculator these number, let me see what it's come, 22 let me put 2237 minus from where it comes, right, 3257. So it almost lost around 30%, right, so in a day, right, so basically it was here and 30%, and so far it has recovered, right. So the main thing is, if we have a gold in our portfolio, so it's not on the long term investment perspective, but think from this perspective, right, so from 1 year in the gold, it gives the positive return, so it will bring some kind of a positive return like 26%. So and so far, so this is a 1 year return, but so far for up to year to date up to now, right, this ticker has gold has provided 16% return, which is phenomenal, and in last 3 months is 9%. So where all the investment was declining, so we have certain part of our portfolio which brings the positivity, right, so it won't suffer that much. So that's one of the reason it's good to have this portfolio, this kind of stuff, asset in our portfolio, right, so that's it. And this is pretty big in terms of the assets. So under this is not like a small, this has $66.91 billion investment under this ETF. Okay, so that's the number one. The other one is, which I like to share, is IAU. The IAU is a similar concept, right? It's also tracks the gold spot, less expenses, and gold bar. The only thing is it's from the different company. The issuer is BlackRock, and under the brand name of iShares. It started in 2005, whereas compared to it's just this one is 1 year right ago. So pretty much same. It's the low cost options which investor seeks, right? So so it's a little bit cheaper as correspond to that. So but otherwise everything, it's very stable. Asset under management is also not that bad, is for sure is very good, actually almost $26 billion. And the gold bars held in the instead of only in London, here the gold bar are held in all around the world. Maybe it's a little bit better rather than in one place, right? So it's very specific. Vaulting requirement should be considered as Seagold, which promise to store in specific location, as with competitor gold. So here they mention their computer is gold. Investors should be in long term, blah blah, and so on, right? So from the hedging perspective, and if I this is either option is good. If you want to go a little bit cheaper options, for sure, I don't mind even IAU. I like IAU as well. Why paying something when we are not that billions of dollar investment, right? So if you get a good deal in the same cheaper price, and from the and you see pretty much the 1 year is to 4.14 percentage returns. Up to now it's 16.34 percentage return, right? And 3 month is 8.74 return from the past. And if I compare quickly with GLD, it's pretty much around the same ballpark. So nothing you see looks like exactly the, yeah, this one is even better actually. Up to there is 0.34, where as compared to GLD's 16.10. Yeah, and even 1 year return. So surprisingly, the IU return is much better for 1 year and year to date as compared to GLD, and also it's charging the lower fees as well, only 25 basis points. Okay, so that's quickly on high level on this. So if you like these two, so kindly subscribe, new to it, kindly subscribe to the channel, and if you like, don't forget to give a thumbs up, and which more and more people will look and see this. And hopefully, if you want me to cover any other stocks or any ETF, and yeah, and one more question: how you do your portfolio diversification, right? Because that's steps when we add such certain these kind of asset class to our portfolio, it's brings some diversification. So I like to know your opinion, how you do that as well. So kindly please put in the comments and give thumbs up to this video if you like it. Okay, see you in the next video, hopefully soon now, and bye for now. Thanks.